Good afternoon, everybody. I hope everybody's safe and keeping your family safe in these really crazy, troubling times. I'm going to do my best today to try to go through some of the resources that are out there to help sustain our businesses through this, what I would call the rockiest period in my career and probably everybody else's career. You see two emails on there. Well, which is mine, and one is Jen Crawford's. So I am going to take questions at the end, but feel free to email Jen the questions, and then she's going to try to just kind of sort through them, and then forward those questions to me. We do have everybody unmuted just because we're probably over capacity. And we just, I think if there's any other background noise, it would be difficult. This is the first time for me ever doing a webinar. I've watched webinars. This is different. So I'm hoping this all goes well from a technology standpoint and from a presentation standpoint. I'm usually better in front of an audience because I get energy from the audience and reading the audience. But this time we can't really come close together. So we're going to rely on Zoom technology. So as somebody told me today, they welcomed me to the 21st century. So here we go. I'm going to go through the agenda next, and then and there's the first. There we go. So here's our agenda. There's a lot of bullet points, and I'm not hitting everything that's transpired over the last 2 weeks. So if you do have a specific question on something that I am not addressing, you can definitely ask that to Jen, and I'll do my best to answer that question. So we'll go through the delay of tax season and what that means. We'll go through what I think is the most important thing here in the payroll protection loan. We're going to spend most of our time there because I think that is the a thing that can help our businesses out, and it's the one opportunity for the first time in our lives to actually get free money. Although we would have given up free money not to have this disaster. Also going to talk a little bit about the disaster loans under 7B. That's under the SBA program. We're going to talk about the employee retention credit, a deferral of payroll taxes, changes in the net operating loss rules. We're going to talk about the changes in loss limitation rules. We're also going to talk about the interest limitation rules. And there's a qualified improvement property fix that we've been waiting now for, I guess, a little over 2 years, and it took a pandemic for them to fix this technical correction that they did in the Jobs Act of 2017. There's a couple of things on the retirement plan that we're going to discuss, and then a very small thing on charitable contributions. So, relief for tax. Wait a second. What? Yeah. Relief for taxpayers. Who's covered? So it's a taxpayer who has a return that was originally due on April 15th. It does not include returns that were due on March 15th. So the tax return automatically has been extended to July 15th. No extension is needed at this time. Your liability has been deferred all the way till July 15th with no interest. And your first quarter estimate is now deferred. If you make quarterly estimates, is now deferred to July 15th as well. The second quarter estimate, as it stands today, is due June 15th. Now there is a fix around that, besides a government fix. And my guess is, depending on how long this pandemic lasts, my guess is they're gonna defer the second quarter estimate as well. But if there is a fix around that, so if cash flow is tight, talk to us. And if you do go on extension on July 15th, what we can do is actually pay the money in July, and then we would refund it but apply it, and that'll cover your second quarter estimate. So it's a way, that's a little trick that we can add 30 days to that second quarter estimate. It's not huge relief, but there's some relief there. But if I'm a betting person, I think there's going to be some government relief on that second quarter estimate. What is not covered? as I have already said, any partnership or S corporation returns that were originally due on March 15th, and there's no extension to payroll taxes and excise tax payments. I'm not so sure how to feel about the extension of tax seasons. There's been rumors for years about that they were going to make tax season longer because it's so compressed. But I could tell you that our staff's not very happy about doing tax season in May, June, and July when the weather's really nice. But we're working as we normally have, except we're just working remotely. So if you haven't got your information into us, please get it into us, because we're going to try to get as much work done in the month of April as we possibly can, so that we don't have a summer of tax season. Payroll protection loans. I'm sure you all have read about these loans. I've spent probably the last week, 60–70% of my time trying to understand these loans and talk to clients about these loans. It's under 7A36 of the SBA Act, SBA administration. The covered period, which is important, is February 15th to June 30th of this year. You obtain the loan from a Treasury approved bank, or any bank that provides SBA loans, including thrifts and the words other banks escaping me. And it's my understanding that all the loans go through the bank. However, I did speak to one client today that's based in New Jersey, and they bank with Fulton. And my last conversation with them is that they wanted them to apply through the SBA site. I don't believe that's accurate. So if any of you guys bank with Fulton, you may want to be talking to your loan officer, because I don't see anything where the payroll protection loans are applied through the SBA website. It's only the lost disaster loans that are applied through the SBA website. What we're recommending, talking to all the SBA professionals out there, is that you go with your bank. Don't shop around for bankers to do this, unless you're with a really small bank and you don't think they can get it done. And the reason why we say that is that the bank, your bank, has a vested interest in you getting this loan, because it's going to make you more solvent. And the reason why we wanted to do this today is because these loans start going into place tomorrow, and you can start applying for these loans tomorrow. After this call, if you haven't started doing this application, I want you to start doing this application and get this information to your banker tonight or first thing in the morning, because we want you to get into the queue. I believe there's $377 billion out there for this plan, which sounds like a lot of money. We all would like just a little piece of that. But this is funding every single small business up to 500 employees payroll for 2 months. That's not a lot of money. This money's going to go quick. There's some rumors that this money's going to go in one day. So let's get these applications in today, tonight, to your loan officer. The beauty of this is, and I think this is like music to all our ears as business owners, is there's no personal guarantees. No personal guarantees, and the cherry on the top is there's no collateral on these loans either. What you have to do to apply for this loan is you have to certify a couple of things. That the uncertainty of the economic conditions to support your operations within this current economy that we have. The funds will be used to retain workers and maintain your payroll, mortgage payments, lease payments, and utility payments. And we're going to discuss that a little bit more in detail as we move forward. That the borrower has not received any other 7A money for the same purpose. It doesn't mean that you couldn't apply for a disaster loan that was not going to be used for payroll. You just can't get a 7A loan that was going to be used for payroll protection. Eligibility: less than 500 employees, sole proprietors, independent contractors, and I put a combination full service down there because these are highly lot of full-time equivalents within those businesses, but it's based on location. So that if you have 5 or 10 restaurants, you're probably over 500 employees, but you're still a small business person. It's going to be by location. So that's going to make a little bit more people that will be eligible that otherwise would not have been if it was just a 500 employee limit. The maximum loan amount, the maximum money that you can borrow is your average monthly payroll costs for the last year to the date of the loan. So what I've been recommending to everybody is take their payroll from March 1st of 2019 to February 29th, 2020, and figure what that total payroll is and come up with your average of your payroll. You can also include any outstanding disaster loan under 7B2, which we'll talk about in a little bit. And the loan cannot exceed $10 million. So what is payroll costs? And there's a lot of ambiguity associated with what is payroll costs. What we look at payroll costs is wages, payroll taxes, unemployment comp, workman's comp. It's not clearly defined what is included in wages. So it's clearly the gross amount that you're paying your employees, wages, commissions, or bonuses, what have you. And the one caveat is that the compensation can't be more than 100 grand. So if you have employees making over $100,000, when you're doing your monthly schedule, you have to annualize that salary down to $8,333. What you do add to that payroll cost is your retirement contributions and your healthcare premiums. So if you match on your 401k or make a profit sharing contribution, those are all added to payroll costs. So where they excluded payroll taxes on the federal side, the Social Security and Medicare tax, they didn't exclude the state unemployment and if there's any other local taxes associated on the wages. That is all included in compensation. That's small dollars, but every bit helps to try to get this loan up to the maximum amount possible. For example, if you have an employee, talk about the $100,000 cap. If you have an employee that makes $100,000, but you're also providing $5,000 in a 401k match and a $10,000 healthcare premiums, our understanding of this bill is that you get to use 115 for that person. So the cap is on the wages and the commissions and bonus, the true salary. You can go over that $100,000 number per each person when you throw in those 3 other points there. There's a last bullet point here: compensation to an employee whose principal place of residence is outside of the United States. So what they're not trying to do is allow us to borrow against anybody who works for us but doesn't live here. Acceptable use of funds. So during the cover period of February 15th, 2020 to June 30th of this year, this is where, again, I think there's some grayness within this bill. They're saying the cover period is February 15th, but the bill wasn't actually signed until March 27th. So when I first started getting into the bill, we thought that, hey, there's a period that we can use February 15th because we didn't start laying off our employees and get through April 15th. We have this 8-week period that we're looking at. But we're finding through the SBA regulations that are coming out that it's costs incurred 8 weeks from the time that you apply for the loan or any period in between the date that you apply for the loan through June 30th. And those costs that are the money can be used for payroll costs, healthcare, interest on any mortgage payments that you have within the business, not principal, any rent payments. And I don't see any exclusion. If you own your own building, you're paying yourself rent, I don't see any exclusion there, or that'll be backed out. and any utilities. Additionally, if you have any equipment loans that were incurred prior to February 15th, the interest on these loans would be allowable for the use of these funds. The term of the loans is a maximum of 10 years, and the maximum interest rate is 4%. Although the first thing that I read through the SBA when they issued some of the regulations, I think it was on Wednesday, I believe the cost may be up as low as 0.5%. And they guarantee a deferral of repayment for 6 to 12 months. So that was nice that they're giving us the ability to borrow 2.5 months worth of our payroll, and we can use that money for rent and such. But this is really the cherry on top. This is the loan forgiveness. So if funds are used for the intended purpose, the first 8 weeks worth of the payments will be forgiven on a tax-free basis. So if you ever had any cancellation of indebtedness, you know that it's not tax-free income. This income not only will wipe that part of that loan or all of that loan off the books, but you're not going to have to pay income taxes on this money. So this grant essentially turns into free money. And that's why I'm saying every single employer, regardless of your situation, whether you have 100% of your employees or 10% of your employees, you should apply for this loan because you're going to get some loan forgiveness. And the people who haven't been hurt or they're in essential business and they have 100% of their employees, they're probably going to get 100% forgiveness. For the folks who've been hurt and had to lay some people off, okay, you're probably not going to get 100% forgiveness, but you're going to get some forgiveness, and you're going to get a loan at a very low rate to retain your employees. The goal of this loan was to make sure that we kept our employees working or being paid, so it didn't saturate the unemployment lines. Well, here's the one problem with this, is they did this about 2 or 3 weeks too late, right? Because we've had 9 million people file unemployment now between last week and the last 2 weeks. And I imagine this week that'll be reported next week will be even greater. So it would have been nice if they had this plan in place on February 28th, because then we might have thought differently about how we acted. But I think the folks who have acted quick in terms of reducing their employment are going to be a step ahead of their competitors, because in this world, we need to preserve cash. Cash is going to be king. There is a reduction. This is when I like to see everybody's faces to see if everybody's understanding what I'm saying, because that is the ice cream sundae with a couple of cherries on top to get that loan forgiveness and not pay taxes. There's a reduction of loan forgiveness if we cut employees during this 8-week period or cut salaries more than 25%. And we've received $10,000 under the advanced portion of the disaster loan program. So let's talk about the reduction a little bit. So there's going to be 2 time periods that we're going to measure your full-time equivalents, and it's your choice. For the first time in history, the government's actually given us a lot of flexibility on all of these different plans. So the first time period is going to be January 1st to February 29th. We're going to figure out how many employees we had on average for those 2 months. And then the second time period is June 30th of last year to December 31st of last year. And what we will do is pick the period that you have the lowest amount of employees. And the reason why is we want that number to be as low as possible, because my guess is there's been a lot of contraction for everybody that's out in this audience, and we want to make sure that we maximize the forgiveness. It's not something you need to worry about today in terms of figuring out what those average employees were during the first 2 months, so this year, the last 6 months of last year, because we'll need that data when we go to get loan forgiveness when we apply to the bank sometime in July and August. The other important thing is, some companies are either automatically rolling back salaries or reducing the work week, which then rolls back salary. If you maintain everybody's salary at 75%, there'll be no reduction of that loan forgiveness. You'll still get the loan forgiveness that you were allowed. But if you, let's say you had an employee that was making $1,000 a week, and you lowered them to $500 a week, that's $250 below that 75% level. That $250 in that little example would reduce our loan forgiveness that we would be allowed. So if at all possible, and then again, you got to look at your own cash flow projections and what you can do as a company based on what's happening within your walls. But if you are able to maintain people at 75%, you're going to get the full loan forgiveness depending on your full-time equivalencies that you have. Yeah, it's kind of, I think I had a duplicate slide there. Restoration of loan forgiveness. So we don't know when this market's going to open back up. God, we all hope it's tomorrow. We know it's not tomorrow. I'm praying that it's May 1st. I'm sure we're all praying that it's a little earlier than that. But if you do replace your employment by June 30th, some of that loan forgiveness that you lost between that within that formula of looking at how many employees you had, that will be restored. And I have a little example there that shows it, because it's very confusing. So in this example, you had 40 employees. They were eventually cut to 30 in April. February 15th, 2020, X company paid a salary of $60,000 that was reduced to $30,000 on April 1st. Before June 30th of 2020, X Co rehires all 10 employees and raises a salary back to 60. X Co is entitled to the full $440,000 forgiveness. Now, in that example, there was an example before that was rolling forward that you don't see. But what it did was, in this example, originally, the difference between 75% of 60 and 30,000, they lost that loan forgiveness. But that was restored because that person was then bumped back up to 100%. So again, we're going to have a lot of flexibility over the next 2.5, 3 months to ensure that we maximize our payroll protection loan, or maximize the forgiveness on the payroll protection. This would have been a great time if we were in the audience, is to ask questions on that loan, on the payroll protection loan. But I highly encourage you all again to go out and get that loan, and do it as soon as you possibly can. These disaster loans under 7B2 of the SBA. So these are the loans that you do apply directly on the SBA website. And if you go on SBA.gov, there'll be a yellow banner that says disaster loans. It'll take you through, and then it'll ask you a sort of questions, and it'll basically feed you to where you have to go to start applying for this loan. So these loans were up to $2 million backed by the SBA. And then they're there to help you meet your normal working capital needs when there's been a qualified disaster. So we haven't seen this in our lifetime, a pandemic lifetime. Usually these 7B2 loans, they're used when there's a hurricane or an earthquake or some other natural event. We haven't had this type of event. So this is, it's an odd, it's an exception that we've been able to use these loans for working capitals in economic distress times. The current cover period is from January 31st to the end of this year. The term of the loans are 30 years, and the rate is 3.75 for businesses and 2.75 for non-for-profits. Again, for music to our ears is there's no personal guarantee on loans up to 200,000, and these are available to businesses less than 500 employees, sole proprietors with or without employees. as well as ESOP-owned companies and 501(c)(3)s entities. So let me back up again on the disaster loan. I probably recommended this to my clients probably 75, 80% of the time, because 75 to 85% of my clients are having financial distress. I do have a minority of my clients that, in a crazy way, they are growing during the month of March, and their orders are growing for the month of April. And they're just in the right business for this times. So we're all going to be financially stressed. Like, I'm talking to folks that are going to have a 40 or 50% decline in revenue. You still have a lot of the same overhead, excluding payroll. So I would use these disaster loans to help with those costs. And you can see that the rate's low, and the payback period's over a really long period of time. So your cash flow, it will definitely help out your cash flow. Employee retention credit. So it's a new credit to encourage, again, for everybody to retain and maintain salary for the rest of 2020. The credit is against payroll, not income taxes. Specifically, this credit is against Social Security tax, which is the 6.2% that you match on the employees. And what's there is the most important line there is it's fully refundable. So the credit is equal to 50% of qualified wages paid to each employee, and is done on a calendar year basis. It applies to the wages paid after March 12th and before January 1st, 2021. Thus, with the maximum credit for part of Q1, Q2, Q3, Q4 of 2020. The total wages taken into account for an employee cannot exceed $10,000, plus allocable healthcare costs. Now, it's important to note that if you get the payroll protection loan, you can't do this one as well. So if money does dry up in the payroll protection loan, this is going to be our fallback. I'm hoping that we don't have to fall back to this, but this is a fallback for the folks who either don't get the payroll protection loan, the money runs out, or for whatever reason. And this is a credit that you can get on your folks for the rest of the year. So who gets the credit? It's anybody who's carrying out a trade or business in 2020. Satisfies for each calendar quarter furlough test, full or partial suspension due to orders from an appropriate government authority, limiting commerce, travel, group meetings due to COVID-19. Or there's a drop in revenue test. So if your revenue drops for 50% in any one quarter, that makes you available. This credit then becomes available to you. And it's over the same quarter of the previous year. And it continues until your revenue is 80% of the revenue for the same quarter over the previous year. And this includes tax-exempt organizations. So, tax-exempt organizations that have a lot of fundraisers during this time frame are going to be severely hurt. This is an opportunity that they're able to save some costs. What are qualified wages? Well, if you have more than 100 full-time employees during 2019, you count all wages paid during the quarter for which someone was not providing services. So that means you're paying your employee, but they're sitting home. I don't really see that being applicable to a lot of people, because we don't necessarily have those deep pockets in the small business world to pay somebody to sit home. There's exceptions to that. But if you're less than 100 employees, you count all the wages paid to employees, whether they are or not working during the furlough period, or any of the drop-in receipt periods. So that's that March 12th to June 30th timeframe. In counting 100 employees, related employers must aggregate. So the 100 employee limit could come into this thing quicker than you think. So if we have to aggregate under IRS rules, then we have to look, if you have related companies and related ownership, we have to look at whether you have more than 100 employees. And as I said, qualified wages are capped at $10,000, but may be increased by employees' applicable share of qualified healthcare expenses. I believe that it does. It's just a little unclear right now at this time. They've been getting some, corrections. I did this presentation yesterday, and we had to make some tweaks to the payroll protection plan because there was changes yesterday as I was writing the plan. So it's pretty fluid, and we're trying to stay up on it. It's a tremendous amount of information that we're trying to get out to you all. Deferral of payroll taxes. So what this is it allows employers to essentially defer the amount of payroll taxes that you pay, the 6.2% share. 50% would be due December 31st, 2021. That's actually a typo there. That should be 2021. Excuse me. That's me reading it wrong. The taxes for this year, the payroll taxes for this year are not due to December 2021. And the balance would be due December of 2022. So essentially you can get a 1.5 to 2.5 year loan, non-interest bearing. You cannot use this if you got the paycheck protection loan. So again, if you go and get that payroll protection loan, this is not going to be available. So this is, I don't know, probably the 5th change to net operating losses in the last 12 years. And some of them have not been that positive. This is a positive change. They're expecting people to have losses this year. So net operating losses for 2018, 2019, 2020 can now be carried back 5 years. The old law was we couldn't carry it back at all, and we had to carry it forward. And additionally, the losses that carry forward, we can offset 100% of our income, where the old law was limited to 80%. So there's opportunities here, whether you go back, 2018, if you had a net operating loss, does it make sense to go back to 2013? So we'll look at the income that you had there versus the income that you may have going forward and see which way does it pay the most. Generally, you always try to go back and get your money because that's lost money. You can never get it back. You could always do something into the future. So there's a lot of planning opportunities that I've been looking at for my clients on this net operating loss piece, as well as the coming slides. Changes in the individual loss limitation rules. So in the Jobs Act of 2017, if your business had, and combined all your business, had a net loss north of $250,000 or as a single person, or $500,000 as filing joint, those losses were capped at those two numbers, 250 and 500. This is suspending Code Section 461L for 2018, 2019, and 2020. So I've had clients that have had losses in 2018 and 2019 and north of 500,000. We can now go back and amend 2018 and take all the loss and either get more money back or create a net operating loss that I can then carry back or carry forward. These rules do go back in play back in 2021, and wages will not be counted as business income. This is a section that had us all CPAs pulling our hair out, and I'm not going to go into the details of this, but the big picture in the Jobs Act of 2017 is it limited interest expense to the extent of 30% of adjusted taxable income. Well, that has now been increased to 50%, and it's just for this year. And because of everything they've done in terms of giving us flexibility, in that last line there, you see in 2020, we can elect to use our 2019 adjusted taxable income. And the reason why that's important, there's a good chance that we will all have losses this year. So that would limit our interest expense. But 2019 was good economically. So we could go back and use our adjusted taxable income in 2019 to maximize the interest deduction in 2020. This is a weird time that Uncle Sam and the government's actually being friendly towards us and giving us flexibility to see what is going to give us the greatest deduction or greatest loss. Qualified improvement property fix. So I kind of joked a little bit about this when we went over the agenda. So in the Jobs Act of 2017 and trying to rush that thing through, qualified leasehold improvements were supposed to, the intent was that they were supposed to have a 15-year life, which then would make them eligible for 100% bonus depreciation. So if you did $100,000 worth of improvements to your office, your warehouse, what have you, with that law, you were supposed to be able to expense that whole $100,000 in that first year. Well, when the bill actually got written, is that they did not get their 15-year life, and therefore they were not bonus eligible. So we were told in 2018, and a lot of you went on an extension in 2018 to wait till September because we're going to get that technical correction. But because Washington's a little dysfunctional these days, the Dems were never going to give the R's another win, so that was never going to happen. So it took a pandemic to fix this technical correction in the intent of the law. So now what it allows people to do is go back, amend their 2018 return if they had leasehold improvements and expense them immediately, and either create a net operating loss that you can carry back or carry forward. And I know all of us here, we have a bunch of clients that are in that boat that we're going to be able to reduce income. So there's a question there that is still unclear to us, and it's not really important to this, but I think you should know about it. Is that whether we have to go back and amend, or we can take what's called a 481 adjustment, which means not go back and amend 2018, but take the actual deduction in 2019, so that there's one less tax return that has to be determined. So it's to be determined. If they give us the flexibility that we can do a 481 adjustment, then we're going to look to where does it make sense to have that deduction. If it makes sense to have that deduction in 2018 because we're going to create a loss and we're going to take it back to 2013 because we had a lot of income in 2013, then it makes sense, and that the cost of that tax return is going to be irrelevant. So if they give us the flexibility whether to make it in 19 or 18, we're going to make the decision based on what's best for you in terms of refunds. Retirement plan changes. So in order to, everybody's having trouble with liquidity, right? You lose your job, unemployment might not be enough to cover your bills. They're allowing people to take money out of their IRA or 401k up to $100,000 who is either diagnosed with COVID, spouse or dependent is diagnosed, or who experiences adverse financial consequences as a result. So it's hard to find an American that hasn't had adverse financial consequences as a result of COVID-19. I'm sure there's somebody out there. But so I think everybody would qualify underneath this. It is subject to income tax, but you can spread that income over 3 years. So if you take out $100,000, you would pay tax on $33,000 of income this year, $33,000 next year, and $33,000 the following year. You also, it's almost like an interest-free loan, is that the individual may repay that distribution within 3 years to avoid paying tax on that distribution. So there's a little challenge there. Are you going to repay it, or do we pick up a third of that income in 2020? So these are discussions that we're going to have with you all about whether you're going to be able to repay that money or whether we should pick that income up. And do we have to pick that income up and then go back and amend when we do repay it? Those are all questions that I can't answer right now, and we'll hopefully get some answers as we get more clarity as things are being put into the regulations. Your employees are also allowed to borrow now, or if you're an employee, you can generally borrow $50,000 against your 401k. That limit has been increased to 100 grand. The RMDs, the way I read it, is that RMDs are suspended for individuals turning 70 and a half in 2019 and have not yet received their 2019 distribution, because when you turn 70 and a half, you have to take it out by April 1st of the following year. They don't have to take it out. There's some interpretation, and I have to get clarity on this, and we'll probably put it in our newsletter if it affects any of you guys, but it definitely affects a lot of our clients, is that some of us believe, and I'm not one of those yet, that believe that RMDs are suspended for 2020, meaning that if you don't want to take money out because the market came down and you don't need that money, you don't have to take that RMD. So we're going to get some more clarity on that as we move forward. And our last slide is really a really small thing. So, you know, when they increase the standard deduction to $24,000, there's a fair amount of people who now don't itemize. Some people don't have a mortgage, and you know they give $10,000 to charity. They have $10,000 in real estate taxes, but they don't have enough to itemize. So for charity, they didn't get a benefit for it. So this is a small token that you can take your standard deduction and get $300 cash contribution deduction. It doesn't apply to anybody itemized, and it wouldn't matter whether it applied to anybody that itemized because they're already getting that deduction. So with that being said, there's a lot of information. You know, I hope that I was able to get through. I mean, in summary, if you're able to get that payroll protection loan, you have to go for it because it is free money and it'll help you get through these next couple of months. And the way to look at it is it's additional revenue that you're not going to have to pay tax on. And you know, essentially, it automatically creates a loss. Let's just say that loan's $200,000 and your payroll is $200,000 and it gets fully forgiven. Those deductions are still a deduction, all right? You still have an expense of 200 grand, but your revenue is zero for that piece. It's immediately going to increase your loss or roll over your income by $200,000. So I highly encourage you to talk to your loan officers after this webinar. If you haven't started, get those applications going. You can download one from the SBA site or get your banker to use theirs because they may be more particular. It's not an in-depth application. It might take you an hour, 2 hours max, but I really want you to get this in the queue tomorrow because I want you to be in front of the line. So with that, I'm going to take some questions. Please email Jen if you have questions, and I'm going to do my best to answer them. I'm looking at the questions now, so that's why I'm looking down. Oh, I have a lot of emails from Jen. All right. Bear with me. Somebody asked a question, who qualifies for payroll? So I believe you're asking that in regards to the payroll protection loan. But I'm not really sure I understand the question, but if the question is, does the owners qualify for as compensation? They do. They just their compensation is limited to $100,000. If you're an LLC and you take a guarantee payment, we've taken the position that that guarantee payment is compensation. I hope that answers that question. And if it doesn't, you have my email address. Please email me your question, and I will get back to you on that in the next day or so. There's a good question. What if you have no employees? What's available to you? So the payroll, the paycheck protection loan is not going to be there for you. So that's where you want to go to that 7B2 loan. You want to use this disaster loan. So, that's my next business. It's a automated garage with no employees. Just joking, but so my colleague Jen, she'll be making fun of my jokes. She always calls my dad jokes, but I got to have a couple of jokes, even though they're bad. So for you that don't have any employees, you want to apply under this disaster loan under 7B2, which you apply directly to the SBA. Now, it's going to be for working capital. In theory, it should be, so if you have no employees because it's a rental, your loss is the loss of the rental income. If you're a sole proprietor and don't have wages, I think you're under that payroll protection line. Even though you don't have payroll, your sole proprietorship, your Schedule C, is deemed earned income, and you would be eligible under that payroll protection loan. Jan, you put it in yellow. I can't read it. My eyesight. Yeah, so the question was, if I'm not highly impacted as of today, can I apply for this loan down the road? So you can apply for the SBA 2 loan all the way through December 31st of this year. The payroll protection loan is only good for covered employees or covered, costs from February 12th to June 30th. So if you don't start feeling the pain from Corvette until July, then your best bet's going to be under 7B2, and you can apply for that at any time after that. There's no personal guarantee. What happens if we don't pay back the loan at all? Yes, that's a good question. And there's no collateral. I would assume, again, I'm not an attorney, but I would assume that, okay, the piece of the loan that didn't get forgiven, or under 200,000 under the SBA, the 7B2 loan, if you didn't pay that back, what happens? I think two things could happen. One, I think it'll be a taxable event, right? Cancellation of indebtedness income. And two, the bank, I would believe, would only be able to go after the underlying assets of the company, even though it's not used as collateral, but it would be the same thing as a vendor. They can sue you and try to collect that money from general assets of the company. And I would think the bank could do the same thing. But it would be taxable income. If I'm only intending to get the loan for free money, what is the best plan? I love that question. Only takes the 8 weeks forgiveness part and then pay back the rest, or what? So, I've had some conversations with some clients, like, I feel greedy taking this payroll protection loan because I'm not hurt. And I don't need the money. I should leave the money there for everybody else. What I would say to you this is, you don't know if you're going to be hurt. We don't know how long this is going to last. I think we all knew as entrepreneurs that this was going to end April 30th. We're really adaptable, and we can adjust and how to operate our business, but we just don't know how long it's going to last. So the payroll protection loan, again, will it come back? Will they renew it if this continues? They might. but we don't know. There's no guarantee to that. So I would go out and get that. Like I said, it's free money. Government hasn't given you free money ever. Yeah, and then my guess is this will be the second part of that question is, do you pay back the rest of the loan? And of course, yeah, you'll pay back the rest of the loan. But my guess is you're going to pay that one back as low as possible, because that loan's probably going to be your lowest interest rate loan that you have. And I would rather use my resources on paying down debt that has a higher interest rate. Guys got a lot of questions. That's good. I adjust a few after I forward. So the question is, if it's not on our bank's website, how do I apply for this loan? I would download the sample. It says sample on it on the SBA website. Fill it out, get all the information, PDF it, and get it to your bank. The other thing I would do is make sure you have the cell number of whoever is in your bank, your loan officer, and tell them they need to get this loan to you. What I'm finding is the smaller banks are having trouble with this. The bigger banks are not. I heard one bank, which I'm not going to say in this call, was pushing people to go to another bank because they couldn't handle it, and they were a smaller bank. As I suggested earlier, I want you to go to your bank, but if they're not going to be able to execute this for you, then you got to go somewhere else. But minimally, I would get that SBA application, even though it says sample, so that at least, even if we can't use that application, at least you have it prepared, and it'll take you less time once you actually have the application tomorrow morning. Because these loans go live, the banks can submit these loans tomorrow morning. If you have relationships with multiple banks, can you apply to multiple banks? I don't know that answer. I did actually get that question from a client today. I'd just be afraid of, I guess if you disclose it, then I guess you'd be okay, but I'd be afraid of fraud. I just don't, that word scares me a little bit. So I don't know that question. I don't know that answer. What if you only have part-time employees? Not a problem. So, if you got 10 people working half-time, when we go and do that calculation for full-time equivalents, you just have 5 full-time equivalents. And whether you have 5 full-time equivalents during the period that we measure for last year or the first 2 months of this year, we're still going to measure the full-time equivalents during the cover period. So regardless of whether you're full-time or part-time, the employees are eligible. Yeah. If I apply for the $10,000 advance from the disaster loan program, can I still apply for the payroll loan? Will it reduce my forgiveness by that amount? So the first answer is yes. You can apply for the payroll protection loan. It does not preclude you from applying for the payroll protection loan, and it will reduce your loan forgiveness because that is a $10,000 grant. That's not that advance is a grant. It's not a loan. So that's why they're having you reduce that piece. So the question here is, can I go through my bank for the disaster loan? That's the 7B2 loan that the screen's up on, or is it better to go through the SBA? I believe you have to. I mean, I think the banker would be a better one to understand that, but my understanding of the SBA stuff is that the 7B2 loan, you have to apply through the SBA. I haven't heard of anybody that got a 7B2 loan yet. All I've heard so far is that people have gotten something back from the SBA that we're processing your application. That's it. So I don't know how fast this money is going to move. Same thing with the payroll protection. I just, you got to think of all these thousands and thousands and thousands of small business that are applying for this, and got the same amount of bankers. A good chunk of the costs associated with services we provide are through contractors. Is there any way to include contractor pay and payroll and paycheck protection loan? That is the question of the last week. I think it's unknown. I would want to understand your business better. So I'm going to give. I like to give extremes to kind of paint the picture that I think I would argue to the bank that my contractors should be allowed in that payroll protection loan. So I once had a cable contractor who was a subcontractor for Comcast, and all the guys that came from our house that you thought were from Comcast, they were actually working for the cable contractor, and but they were all 1099 employees, and what dictated that was the contract with Time Warner or Comcast or who have you, whether they had to be employees or subcontractors. So in that light, they would be qualified as an employee for every reason, with the exception of that we're sending them a 1099. If you go through that 20-factor test of whether they're an employee or not, they're qualified as an employee, or at least meet a lot of those 20-factor tests. Then we have a landscaper that comes to our office and is cutting our grass, once a week for 6 months in the summer. That person would not qualify. But I think if a contractor is somebody that's being paid in, month out, I would make the argument that they do qualify under this. But with that being said, it's not black and white. Again, I would want to understand your business better. So if you want to shoot me an email, shoot me your email. Let me understand your business. Maybe we can have a phone call tomorrow and talk that through. It can't hurt to put them in that their spreadsheet of your monthly compensation when determining that. Let them kick that back. Let's be honest and open. Let's not try to hide it, because we're gonna have to show our payroll tax returns. But we have to make the argument to the bank and the SBA why those people should be treated as employees. I think that's the last question. I'll give it another minute or so to see if you have any more questions, but I truly appreciate your time today, and I know this is a stressful time for everyone. Here, we at Stefano Slack are here to help you. Our success is reliant on your success, and that's the way I look at my role for you all. And I'm getting a couple questions, so I'll, some people want to drop off. I understand, but I'll keep going through questions until there is no more questions, or until my kids start yelling at me to say they're hungry. There's my other bad joke, Jen. What if I laid off Joe on 3/31, but hired Mary on 4/2 for the same salary? Yes, it's not the person that matters. It's the number of people that matter. I laid off 6 guys already. I still have about 10 still working, plumbing, construction, plus 4 in the office. Can you explain the 8-week period? Are the 8 weeks at any time from 2:15 to 6:30? I may rehire the 6 I laid off in construction site and the PA opens. So I have no idea why they put the dates February 12th to June 30th, because there's language in the bill that says that the 8-week period to determine whether the money was used for the proper reason starts with the day of the application. Well, you couldn't do the application because one, the bill didn't pass till last Friday, and we can't apply until tomorrow. So I think it's to be determined whether payroll, we can use the 8-week period from February 12th to let's say April 10th or so. I think it's to be determined on that. The way it reads now, it says no, but I'm not sure why they put February 12th. But let's fast forward. PA opens up May 1st. You hire those 6 people back. Yes, we'll use that 8-week period from from May 1st to June 30th for qualified expenses. And remember that recover. Where is it? The restoration of the forgiveness. So if you go back to your full-time equivalents by June 30th, we're going to restore that forgiveness. So if we can get back to normal by June 30th, I believe you're still going to be entitled to a lot of loan forgiveness, if not 100% loan forgiveness. Are we sending out slides? So I believe we have everybody's email through this. So I am the least technical person that I know. So if we can't do a mass email of these slides, so if you don't get these slides, say by noon tomorrow, then just shoot me an email and then I'll just send them out one at a time. So yes, you can have these slides, absolutely. And again, if you have further questions, either reach out to whoever's in charge of your account, who you're working with. There's a few of us that really dug into the payroll protection stuff, so they may pass you back to me or Mike Stefano or who have you. We'll get you to the right person for the right subject. Yeah, so I just got a note from Jen. Again, it's just reinforcing. Make sure you talk to your bank. They're all doing it differently. They're looking at slightly different periods. So just talk to your banks on how they want to see that information. So, after this, your first call should be to your banker. And originally I was going to do this at noon today, and I was a little afraid of the technology. I wanted to make sure that I had it right. So that's why I did it at 4, but they're all working from home. You all have their cell phone numbers. Give them a call. This is a time of crisis that you get to call them after hours. With that being said, again, I think that was the last question. It was. Again, if there's anything I can do to help you guys, thank you for joining us today. And I appreciate all your time. Thank you. Good luck and stay safe.